Hi, welcome to another episode of Unstructured Unlocked. I'm co-host Chris Wells.
I'm co-host Michelle Gouveia, and we are thrilled today to have Jay Novis from QBE Ventures join us. So, Jay, thanks for agreeing to do the podcast with us.
Thanks for having me, guys.
Yeah. This episode will be slightly different than I think other ones, where we'll probably dive in a little bit more onto the venture capital side and a little bit more of like what's happening in that industry as it relates to insurance and what we're seeing. So getting really excited to have you on to chat about that, since Jay and I know each other from just the venture capital Insurtech space conference circuit, et cetera. And so I'm looking forward to diving in with you on this.
Very cool.
Do you want to maybe give a little bit of background about yourself and how you got into the VC space?
Sure. Thanks for having me, firstly, guys. Privileged to be my first podcast. So I joined QBE Ventures about a year ago as an investment associate. So I sit, within the investment team, mainly sourcing investment opportunities, financial due diligence over potential opportunities, and then also work over existing portfolio companies. So I'm from Australia originally. I was with PwC, and then I joined QBE Ventures a year ago when I moved to the States. QBE is a global P&C insurer. I think we operate in 27 plus countries. We're headquartered in Australia, but listed on the ASX in Australia. But global in nature. Mainly commercial P&C insurance, and we do a lot of work in Australia, North America, Europe. A lot of work out of Lloyd's in London. And the operations do vary quite significantly depending on geographic region. So I think in North America, we're a big crop insurer and ag insurer. In Australia, it's mainly just anything commercial P&C, and then sort of out of the UK and Lloyd's, a lot of specialty lines, marine, aviation, financial lines, cyber. And then sort of QBE Ventures, we sit within the group. But we're also an international team. So we're split across Australia, North America, and the UK. We're definitely more on the strategic side. So, we're a strategic CVC. We sort of invest to help better the mother company, QBE, provide more insight, be more efficient. And yeah, that's a bit of background.
So I think I may have missed it. You came in through the insurance side, and now you're part of the captive venture.
No. So yeah, so I was new to insurance and VC at the same time with this role.
Mm-hmm.
The background is in sort of financial due diligence and accounting, and M&A transactions, and then the VC insurance space was new. Obviously, it helps to get in touch with my Australian roots, joining an Australian company. But yeah.
Awesome. So we talk a lot of, so Jay, I think just for those listening at home, Jay and I know each other from just the VC Insurtech VC circle. My background was in insurance before I joined the VC space, but still learned the VC role, the financial and investment side after the fact. But learning kind of both of those at the same time, was that super hard? Do you still feel like you're learning a ton? When we go to conferences, I feel like there's always a new technology or capability. I'm like, wow, I've never thought about how to apply that to insurance. And I think Chris and I, every time we talk to someone or have a conversation, we're like, wow, insurance is really complicated. It's not as cut and dry as people assume it to be, of just here's a policy, buy it, now I'm insured.
Right. Yeah, no, it was interesting. I was sort of learning both worlds at the same time. QBE was actually a big client of PwC when I was at PwC, and I did work on some insurance clients during my time there. So I sort of had a little bit of background on, the basics of insurance, but obviously, not enough to sort of go and invest and change up the industry. But yeah, it was. I have a good team around me, so they've been, I've learned a lot from them. They've been in the insurance space for decades, some of them. So that obviously helps. We're a tight knit team, and they've done a lot for my development. So
That's
Yeah,
good. Nice
feeling a
shout
lot
out
better than I
to-
did a year ago.
nice shout out to your team and your boss there. Well done.
Yeah.
You talked about a big part of your role being sourcing investments. What does that look like today?
Yeah, so I guess our investment thesis. So we source externally. Go out to startup companies and through connections, through sort of cold calls or cold reach outs. Either way, conferences. General connections within the space. I think most insurtechs within sort of at least North America sort of know each other. It's sort of quite a small world. But we will either source externally like that, or we'll get an internal referral from QBE. So it can kind of work both ways. They might be working with a third party or a vendor, running a pilot or POC, and they might reach out to us and say, "Hey, have you thought about investing in these guys? We're working with them and X, Y, and Z." So it sort of works both ways. As you can imagine, from a due diligence standpoint, if your company has been working with a startup for 3 months, that definitely helps.
A lot of the paperwork's filled out already.
Yeah.
And Jay, because as you noted, that QBE is pretty broad in the P&C insurance space, right? Depending on the geography you're in, are you getting an opportunity to source companies that kind of touch on all those different lines of business? So and I'm thinking in my role too, right? We're pretty all encompassing in terms of the insurtech landscape. So we're looking at any line of insurance, any kind of area of the insurance value chain that it might be touching, whether it's intake, underwriting, claims, data and analytics. But I imagine that for you, you could have a whole week of sourcing companies that are focused on crop insurance, and the following week it's all, inland marine companies or something like that. Is that?
Yeah, I mean, so we have our defined focus areas. We're big on the sort of the risk management and resilience play, but then also sort of on the core insurance, tech adjacencies relating to underwriting and claims and MGAs themselves. Since we are global and we pretty much touch one line of insurance in some way or another, it does open us up to a variety of opportunities. I guess it's just about prioritizing QBE's, wants and needs. In terms of sort of the global landscape, most of our portfolios are US based. We do have a couple in Europe, in one or two in Australia, but most are US based. But sort of, I guess, how we're different and what we can offer with our, global reach and presence is we can help companies sort of set up and start shop overseas and sort of cross those international borders, whether it be moving from US to Australia or to Europe. We have, not just QB itself, but our team is spread out internationally to help facilitate and accelerate that process. So that's sort of how we see ourselves different, I guess, to some other CVCs. But in terms of sourcing, we're pretty global, I guess, in terms of where we look, but mostly US based, I guess.
That ability to help small companies make beachheads elsewhere is massive. I just want to double click on that real quick. That's cool.
Yeah, I'm not saying it's an easy or short process, but it's something we've been successful in doing in the past, and plan to keep doing moving forwards. So,
right on. So, in terms of some of the areas that Michelle mentioned across the the business life cycle and the different verticals, what are you seeing in terms of? I'll be the tech nerd. It's my job here. What are you seeing in terms of trends in the technologies, the things that are starting to pop up, the things that are not so popular as they might have been? I'm curious.
Yeah, so I think generally speaking, sort of automation on both the underwriting and claim side continues to be a big focus area. And if you speak to some of the underwriters out there, not just at QB in general, they've sort of got, there's no sort of system that encompasses everything. They're working with different systems across the value chain of insurance. So, and that don't talk to each other necessarily. So it can be sort of time consuming and frustrating from them. So I think to answer your question, platforms that can be sort of a one-stop shop is a huge sort of focus area. Generally speaking, in underwriting and document ingestion, I know you're familiar with this space, obviously, but we've sort of found that to speed up business means you can win more business as well. So, sort of addressing inefficiencies in the document and submission intake, and then I guess just technology. We've been very active in the geospatial area and sort of aerial imagery space, especially around property inspection and that cat risk. Sorry, go ahead.
No, that's fascinating. I didn't expect you to say that. That's cool.
Especially for, I guess, nat cat, hurricanes, cyclones. We've seen a lot of those over the last few years. So to have that technology, like a different view to provide more insight, sort of pre and post incident management and crisis management has been really helpful.
And nat cat, natural catastrophe.
Yeah, exactly.
Right.
It's cool insurance.
I have to be our conscience when it comes to insurance lingo.
Yeah.
Okay. Yeah, go ahead.
I only learned it yesterday. That's why I said it about 3 times.
So Jay, on that, right? When you're whether it's the business coming to you and saying we've been working with this startup, it may be worth you taking a look, or you coming across a startup that you think the technology is relevant and interesting, and then you want to introduce it into, to someone within QBE to test it out. What are some of the things that you QBE Ventures look for in terms of stage, capabilities? Like, are you guys interested, to the extent that you can share, right? Are you guys interested in really, really early things that QBE can help kind of form and shape and build with the company? Or are you looking for things that are really more enterprise ready to deploy, that have some true ROI metrics behind that you can point to before you make an introduction into the business?
No, it's a good question. It's sort of a fine balance. It's like, really, we look at Series A to C. That's the sweet spot. We have made a couple of seed investments, depending on the sort of strategic case and the company. But it's sort of, you want them to be, we like companies that are early enough that you can work with QBE and, sort of learn and work together and run pilots, and sort of, I guess, create a relationship that will work for both companies. But you can't be too early that, you need to go through. QBE doesn't have the time to help the company, set up shop and finalize the product. They need to be well established enough to hit the ground running, but early enough to sort of be flexible and nimble and be able to work with QBE. And we find that sort of Series A to B spot is perfect for that. They do have product market fit. They are earning money. They do have some ARR, but there's a lot of growth opportunity, and QBE can help shape that roadmap to be so they can be as effective as possible in the insurance industry. Check size is typically 2 to 5 mil. Is normally what we write, and then we do lead and follow with investments. Typically, we like to follow. But if the strategic case is really strong and we're already working with the company internally, then we may lead as well.
How do you? And I may answer my own question as I ask this, but insurance companies I have found have very specific ways of doing things and thinking about the world. So how do you keep, a company that you bring in to work with QBE? How do you keep that company from building a product that really fits QBE really well, but doesn't generalize to the rest of the market? How do you think about that?
Yeah, no, it's a good question. I think a lot of the carriers sort of have the same end goal, I guess, and that's just to be more efficient in how they underwrite, pay out claims, digest documents, and then more insight. So we don't, when we help our companies like when we run pilots, we love to see our portfolio companies and companies we work with go and work with other carriers, and be successful, with other carriers. It's sort of a win-win for everyone, because then they can learn from them, and they can sort of expand on their network within the insurance industry. But you're right, it is definitely a fine balance between managing QBE, but then also the company's growth more generally in the insurance space. But I think usually they sort of do work hand in hand for the most part.
Because of what Jim from Microsoft on a recent episode said, where insurance carriers are all unique, but they're like snowflakes, right? They're all unique, but they generally follow 8 patterns, right? I think I got that right.
Yeah.
I feel like that's probably in that specific scenario that you're referencing, because from our perspective, where we are not a CVC and we work with a number of different carriers, right? Companies that we look for, we hope that they're responsive to many, if not all, of our investors, and for that, like, you want them to be able to Jay's point, be flexible enough to take it and say, you're working with this system versus that system. Like we can connect into that. We've worked with that before, but there's also, IP that carrier is bringing that benefits and makes the product its own and drives the outcomes as specifically to what the carriers need. Got it.
Yeah.
That makes sense. And the relationship usually works better the more flexible, the startup or the partner company is. There might be some QBE might have a request, can we change this? Can we customize this? Sometimes the companies will come back and be like, no, we're fixing our ways. Unfortunately, we can't do that. Yeah. Other companies will be like, of course, and then sit down with us and work together to sort of build something unique. So I think it's just, and that can form quite a powerful relationship. So it's, I guess every company is different.
Yeah, co-development is a powerful force if you can make it work well. That's been my experience here and elsewhere.
Jay, I don't know if you would know just from where you sit and who you're working with, but like Chris and I are still eager to do a regulatory. It sounds so exciting, right? But a regulatory episode, and so I wonder from your perspective, from your perspective, like when you guys are looking at a company or when QBE is working with a startup, is one of the things that you as representing the carrier does, like, can you partner with them, and does QBE kind of help them get through some of the regulatory landscape? Or is that, because I'm just thinking through, like, if it's an MGA or you guys want to go expand into geography that maybe that, and do you help them with some of the filings or product pricing or things like that in those partnerships? I'm not sure if you're close enough to some of those.
Yeah, we definitely can do, and with our global presence and sort of, we do look to make that move and help them grow internationally. So part of that does come with understanding the international framework. I think that's sort of when you divert to the different business units, like globally, to help the company do that. But a lot of the due diligence up front is done up front by our team, and we'll look at that, depending on the underlying technology and the platform. For example, if you're sort of in the healthcare or healthcare space, a lot of that isn't really it just wouldn't work anywhere else. That might be specific to one country or another. So we do look at a lot of that up front, and then if the opportunity is there, then definitely we get hands on deck, and the relevant business units to help facilitate that sort of change.
Interesting. Is another example like a U.S. company going to Europe and having to cope with GDPR? Is that the kind of thing?
Yeah, exactly.
Yeah. Okay. Interesting.
Different, rules and regulations. So,
okay.
Especially around data.
Yeah, of course. Yeah. This is a total left turn, but I don't want to forget to ask because I'm super curious. You mentioned Cat. Are you seeing any technologies?
Using those abbreviations.
I know. I'm a quick learner, Michelle. I'm on it. What are you seeing in like the climate change space? Like, are there any technological hopes for Florida? you know?
No doubt. So we're looking at sort of more in the resilience risk management space, I would say, in terms of trying to use technology to get better insight and understanding for impact. And the idea is that if we can sort of avoid, the best way to manage a claim is to avoid one in the first place. Yeah. So if we can sort of, for example, use this technology I mentioned sort of aerial and geospatial technology to dive deeper into certain areas of risk of NatCat risks. We can look at sort of the roofing or the construction of properties and understand better, what risk they're at, depending on the quality of the materials, and sort of, spatial awareness of how close they are to flooding risk, etc.
Yeah.
If that makes sense.
It does. And stuff like that is more dynamic now than ever before. So that real-time insight, super powerful.
Yeah.
Yeah, that makes sense to me. Okay,
so
sorry.
I'll jump in there too, because I think some of the things that we're seeing really, like, climate change is a big topic, right? And so even within how is the insurance industry responding to it, what are the things that they have to look for down the line, or be concerned about, is also a big topic. And so you're seeing things. I'm not going to hone in on your like Florida specific comment, because I like Florida. I don't want Floridians to come for me.
So my parents live there half the year.
Yeah. But so like, and I mean, it varies, right? Like in California, the prime example is wildfire risk, right? And obviously now with what's happening in Canada and the air quality as it comes down to, I think we've all been affected in some way by it. Like you're seeing a lot of startups saying we can bring new data or bring variables in that aren't something that like the incumbent solutions are modeling for, to try and be better predictors, to Jay's point, of what is really at risk, how to help underwrite, how to select those risks more efficiently and effectively. Same thing, copy and paste for when you're talking about hurricane risk or, tornado risk or things, any NatCat that you would, be concerned about.
That's fine.
But we're keeping a running tally. But then there's also, I think I've mentioned it maybe on a previous episode, some of these companies are really going about it from like a value-added service perspective. Yeah. And so like what are the things that we can provide our insureds to try to prevent the claim from even happening, right? Like what are recommendations we can make? How do we use aerial imaging to indicate, oh, you've got, brush too close to the house, you're in a wildfire zone, like what's the recommendation we can make to you to clear that or keep that clean? There's companies out there that are using weather data to proactively reach out and say, it looks like you're in the path of a storm. Here's what you should do to try and protect your home or your vehicle, et cetera. And then using that same data after the fact to check in and say, it looks like you didn't get affected, or it looks like you did. I think the core to all of that and what interests, at least me, is the data and the fact that you have to be sure that your data is accurate, because that's what you're relying on to do things like offer parametric insurance products, do outreach to your insureds when it makes sense and not kind of freak anybody out or scare anybody, but then also be on the back end, if there is a claim, responsive in a way that's meaningful, right? Like proactively help them, here's your check to help with damages, or here's how we can help you relocate, or we're sorry this happened to you, like here's ways we can help, like let us help you get the claim started, as opposed to figuring out where you have to go. Yeah. And going back to our common theme that we always thread is like, so how do you internally take in that data, manage it, and then use it in a way that can do all of these things in a way that is efficient and makes sense?
Yeah, even that simple example of like there's brush near the house, right? Like finding brush, finding a house, estimating the distance, and then contextualizing it. Like Brush near my house, not a big deal. It's going to rain 6 out of 7 days, right? But in California, that is a thread we pull quite often, which is that data management, data contextualization problem.
Yeah.
And Jay, when you're thinking about it from when you're sourcing companies against like what the broader QBE organization is looking for, are you like, do you tend to try and find things that are more general use cases, or do you really sometimes hone in and say, we are looking to solve this very specific, I'll even call it niche problem, and so we're really interested in finding a one solution type company that does really good at this? Or do you guys typically take a step back and say, that's a capability we'd like, but we'd really like you to be able to do these 4 or 5 things?
Honestly, it depends.
A little bit of
Oh no, this guy too.
Is that Michelle's answer to everything?
Oh yeah.
At least an episode. At least once.
I'm going to buy you a T-shirt with that on it. It's coming your way.
Funny. I mean, it's true. Most of the time, everything does depend. I think I will say in terms of what helps, because a lot of startups do want to work with CVCs to get exposure into that, with the backing of the insurance industry, especially like a global insurer like QBE, for example. I think what always helps is sort of when the companies come to us with like an internal sponsor or an understanding of the specific business unit they plan on working with, and specific examples of use cases. That sort of, because that just helps with the efficiency and procurement as well. So, on the strategic partnership side, there's a lot of work around procurement. We help companies frame up pilots. So the more specific the use case, generally the more efficient and the better the process. I'll also say from a investment standpoint, just having a more complete data room, and sort of is always helpful. So, and including all sort of legal transaction docs up front, whether it be, past rounds, transaction docs from past rounds. If you need, let's say, if you're SOC 2 certified, having all this information available up front is very helpful, especially in a big bureaucratic. Sorry, go ahead.
I was just going to say, for some of our audience, the whole concept of a data room might be a little foreign. Do you mind taking a step back there and framing that?
Yeah, it's basically almost like a shared document room, where a company can post documents or upload documents, I should say, for investors to go through and read. It's like a shared service, I guess, if you want to call it that.
Yeah, I'd say it's really it's the landing page for everything that on the VC side an investor would need to do their analysis and diligence to determine if they'd like to make an investment going forward. So usually you've got like value proposition of the business, case studies, metrics about like return on investment and like results from pilots or current customers that you're working with, financial projections, and then to Jay's point, kind of all of the fun legal stuff that you need just to understand what the history of the business has been to this point.
Yeah.
Right on. Sorry, I derailed you, Jay.
No, it's just always helpful when a startup does their sort of homework up front, and sort of ask those questions up front, just to save time in the process. As you can imagine, it's a big company. There's just to sort of cut out the fat of the layers in the procurement. If you have sort of all the documents, and questions and answers sort of ready up front, as much as you can do, that always helps the process. So we find the relationship, it just works better with the companies who do that.
I think it's interesting, Jay, that you brought that up as part of your response to that question, because I think a lot of times, like, the the kind of cliche is, oh, the insurance industry is so slow to move, and like it takes forever to get anything done. But then on the flip side, it's like, well, at the end of the day, though, they're a data-driven organization and they're a process-driven organization. And so if you've got what they need from a data standpoint and a process standpoint, it will move more efficiently than if you're missing some of those components, right? To whatever you're trying to work on. And I think that the misunderstanding is that startups are so quick and can come in and like get things done quickly. But I think what entrepreneurs are starting to realize, and what's starting to become even a benefit or kind of seen as a positive, is like carriers, the insurance industry is coming up to speed. Like there's years and years and years of legacy systems, of disparate systems, a lot of ad hoc processes and workflows that have been built in order to keep things moving. And within those are locked a lot of data that can't just be ignored or forgotten about as you move forward into new workflows, new systems, new core systems, et cetera. And so it's really important that everyone kind of is transparent of, this is where I am and this is where I need you to meet me in order to get anything done, whether it's a partnership, getting through procurement to get that partnership started. And so even in the internal like day-to-day of the insurance carrier, just any type of data intake is super important. For all of the various things that an insurance carrier is trying to do, whether it's like day-to-day insurance operations or trying to innovate, they need those various inputs.
Yeah. I'm curious, and Chris, you might not have the answer to this, but on the flip side, what's the relationship like from Indigo's standpoint for working with carriers? Are you guys saying, "Oh my gosh, these guys are so slow. It takes years to get things done"?
I wouldn't. So there are two answers to that. There's the sales cycle answer, and then there is the like onboarding a new technology answer. I would say I've been pleasantly surprised, having worked with insurance companies in two different verticals, selling into them, or at least being the nerd that does the song and dance to help sell into them. I have been pleasantly surprised with how fast our sales cycles have been. So, and I think that partly that has to do with just where the industry is today. It's been a decade or more of talking about digital transformation, and I think companies they're really, really doing it right now. It's not just lip service. Yeah. On the onboarding side, I think I have seen cases where, and this is not just true of insurance, but just large companies can't get out of their own way technologically. They've built processes for good reasons, but they're extremely rigid. I think I'm not trying to throw rocks at any of our clients or prospects, but I think it is often true that the best folks in technology don't end up in insurance companies. I think that's changing a little bit now as people have realized that insurance is doing really interesting things, but historically that hasn't been the case. You're at Google or AWS or wherever if you're really good at technology. And so I think the real impact of that is that the technology processes are often a bit out of date. And so a little company like Indico with a powerful platform comes in and wants to go fast. And it's like, hold on, guys. That's not how we operate. And we really have to bridge that gap in a lot of cases.
Yeah, I guess you've got like sort of the bigger insurance carriers, and then you've also got some of the smaller players. I don't know, like maybe more like MGAs or MGUs or some of the more nimble carriers. So I guess it depends.
Yeah, no, it does depend, and it really is sort of the speed at which a company can implement is inversely proportional to their size in my experience, which is not a surprise, I think, but I've got real data and scars to prove it.
Yeah.
I think going back to Jay's point about coming in and just being very clear about what you do and like what you can solve. I think at the core, right? We talk about this often. the two main things, even if you're a startup that does something on, I'll call it the periphery of these two things, everything within the carrier is focused on the underwriting or the claims, right? And what's associated with that, the customer experience as it relates to how fast it is to get my information, how easy it is for me to submit an application, for you to look at it and then give me a price, right? To then ultimately bind that insurance policy. Or on the claim side of, why I don't want to have to call you 5 or 6 times. Like, how can you get my information quickly and effectively? How can you meet my expectations of how fast something will get handled? Have a little bit of empathy and sympathy for whatever situation I'm in that has caused that claim in the first place, right? And so when you step back and look at all the different startups kind of in the what I'll call the landscape of Insurtech, I think it really still boils down to how am I supporting underwriting or even within, like, outside of that, a better product that can be underwritten for the needs of the end customer, or how do I support my customer when there is a claim? Because at the end of the day, the core business of an insurance carrier is claims, right? That's what they're there for, is to help you in a time when you have an insurance claim. So that's how I think about it. I don't know. That's my thesis. That's how I spend my time. Like, when I'm
I believe you.
looking for companies and talking to companies at conferences and looking for solutions that might be reflective of what some of our investors are interested in. Like, I think it really comes down to, how are you helping the core operations of an insurance carrier or an MGA or a broker? Because that's really, and to me, what moves the needle, right? There is a lot of solutions that are really interesting and companies doing really cool things that are helpful, but aren't really solving for one of those two things. And those are the two things that at the end of the day, an insurance carrier will always care about.
I agree.
Yeah.
And I guess on the underwriting side as well, but thinking about both sides of the coin, the more insight, and I guess this is what we're trying to do at the end of the day, the more insight the underwriters, all these insurance carriers have, the better they can accurately price risk. And then therefore customers get a more accurate, truer reflection of the underlying risk too. It's not just on the claims payout to make sure they're well looked after, but also in terms of what they're paying up front, prior to any of that, is obviously important for everyone as well.
That's great. Jay, I want to wrap this up with one more question. You mentioned that one of the things startups should be thinking about, entrepreneurs should be thinking about, is just get your documents in order. Don't make it hard to find out what's true about you. What other pieces of advice would you give to companies in that A-B range that are looking to be funded by someone like QBE?
I think, look, going back to the strategic case, we are a strategic CVC, and so the relevance to QBE and sort of how QBE can help an investment in the company benefit QBE and the startup beyond just capital investment is really important. So I guess we look to these companies to help build up the strategic case and think about specific use cases with QBE. Like, what business units are you looking to work with? Are you open to international expansion? How flexible are you in sort of co-building a product or your platform? I think thinking about this up front, and I know I spoke about this before, but I would sort of echo that that's quite important. Otherwise, just, I guess, in terms of the pitch or presentation, I feel like, a lot of companies sort of forget that we're not like you. We're not looking at this company and working on it every single day. We're hearing about this for the first time. So sometimes just to sort of dumb it down and walk through clearly what your product actually does, from start to finish. With an example, how do you make money? Are you charging a SaaS fee? Is it on a report basis? Volume usage basis? I find just sort of dumbing it down and providing a sort of clear context and background up front is always helpful. But, there's all the buzzwords. They come in with sort of Gen AI, data-centric platform, and you're just like, sure.
The word, I would echo that, because like a lot of times the first conversation, right, or the introduction that like on the VC side we have with the company is like 30 minutes, right? And like the worst thing that can happen is you end that 30-minute call and you're like, I have no idea what they do or like how they do it, right? Like what's the benefit, what's the value proposition that they're solving for? And so like use that 30 minutes to just very clearly say, this is the problem we're trying to solve. This is if it's this is the technology we're bringing in order to do it. This is why we think we're different. And then if you've, to Jay and Chris, to your question, if you're at that Series A, Series B, where you've got that product market fit, you've got some customer wins under your belt, like talking about those specific use cases. Because the goal, right, is to help the insurance industry move forward. So we want to know how you're trying to do that by the end of the call.
My PhD advisor used to say, work hard to make it look simple. And I think that principle applies here as well as to theoretical physics.
Yeah.
I like that. Yeah.
The only other piece I would add to that just quickly, on the sort of people side of things, you're really investing in someone, right? The founder and their story and their mission. And it could be a long-term relationship. So I think sort of honesty and upfront is always important, especially around sort of projections, numbers, pipeline, revenue. I think sort of just being honest and setting realistic expectations up front, and even being candid about where you're having some sort of difficulties or, what are some of the problems you're facing isn't necessarily a bad thing as well. So yeah, I would just echo that as well.
Amazing. It's good to get some of that inside baseball. All right, well, this has been another episode of Unstructured Unlocked. I have been your co-host, Chris Wells, joined by co-host Michelle. And our guest today has been Jay Novis, investment associate at QBE Ventures. Jay, thank you so much.
Thanks for having me.